Airbnb stock is up over 14% in the aftermarket hours following the company's earnings results, which came out on Thursday, February 13th, 2025. Of course, I'm happy about this stock price increase. I've had Airbnb stock rated as a buy for a long time now, and I last updated that recommendation in December, reminding investors that I thought this was an excellent stock to buy for 2025. But do I still think the stock is a buy even at this higher price? I'll answer that question in this video. I'll also update the company's expectations by reviewing the company's latest earnings results to explain why the price is up so much. Let's get in.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Airbnb reported $2.5 billion in revenue in the most recently completed quarter. That was up by 12% year over year. For the full year, the company reported revenue of $11 billion, which was also up by 12%. The company's now very profitable on the bottom line, a 19% net profit margin with $461 million in net income. But what makes this business most attractive is how much free cash flow it generates. In the full year, it generated $4.5 billion of free cash flow, which was a 40% free cash flow margin. The reason Airbnb is able to generate such strong free cash flow is the same reason why I've liked Airbnb stock so much in recent years, and that's because of the asset-light business model. Airbnb benefits from the billions of dollars of assets that the hosts bring onto the platform. Airbnb doesn't need to invest in building and creating new properties to rent out to travelers. It just needs to encourage hosts to list more properties on the platform. And boy, have they been listing more properties on the platform. The number of listings and the number of hosts has increased to the millions because hosts also find the platform attractive. They get to earn very good returns on their properties compared to renting them out on a regular annual rent basis. Instead of renting it out in that way, people find it more attractive to just list the properties on Airbnb, even if the property only gets booked for maybe 3 or 4 weekends of the month. They can still generate more profit from the property than renting it out to someone permanently on, let's say, a 1-year lease or a 3-year lease. And so that attractive proposition continues to bring in new hosts to the platform, which makes it more attractive for travelers because they're more likely to find something on the platform that matches their needs. And so this two-sided value proposition has been working very well for Airbnb and Airbnb stock investors. As I highlighted, I've had Airbnb stock rated as a buy, and I last updated that recommendation on November 14th, 2024. I'll update this recommendation by the end of the video and let you know if I still think it's a buy. The company reported $17.6 billion in booking value and generated 111 million nights and experiences booked. This number, the GBV number, is very important for Airbnb. Right now, the company's focused on growing in terms of adding new hosts and new travelers to the platform. When it matures and it doesn't feel like it has very much growth left in terms of adding new hosts, it can then generate more revenue by increasing the fees that it charges hosts and thereby taking a larger percentage of this gross booking value for itself. Right now, it takes a smaller percentage of this gross booking value because it wants to keep it very attractive for hosts to come onto the platform. And then once millions and millions of hosts have gotten used to a lifestyle of being a host and listing their properties on the platform, then Airbnb can ratchet up the rates that they take from those hosts, and then hosts will already be on the platform and they'll be hesitant to leave to change the way they manage their lives and their properties because they've already been on Airbnb for such a long time. So that's a big opportunity in the longer term for Airbnb to generate more revenue and profit. I mentioned that Airbnb runs an asset-light business model and it generates strong free cash flow. That makes it an attractive company to buy back their shares So in the latest quarter, they repurchased 838 million of their shares. For the full year, they repurchased $3.4 billion of their stock. And as of December 31st, 2024, they had the ability to purchase another $3.3 billion of their Class A common stock. And I think they will continue buying back billions of dollars of their shares for two reasons. Number one, I feel their shares are still undervalued, so management won't feel like they're overpaying for their stock. And number two, they generate so much cash flow that there is little else to do with that money. Instead of letting it sit on their balance sheet, earning a 5% rate of return, they can give that money back to shareholders, reduce their share count, which will then increase the earnings per share, the cash flow per share, and make it an even more attractive investment because they have fewer assets. And so the returns on assets will be better than if they just held on to that cash. Because if cash is just sitting on your balance sheet, you're causing your business to underperform your competitors because that's not assets that are working for you. As a business, you only want to hold on to assets that are working for you. You don't want to hold on to assets that are just sitting around being idle. You'd rather return those assets to investors, and then your business will be better in terms of those metrics that investors consider valuable. So even after this surge in stock price, Airbnb is still relatively inexpensive compared to what you're getting as an investor in this business. An asset-light business model with a total addressable market that's approaching $2 trillion annually, millions of new hosts coming onto the platform, a competitive advantage because all of those millions of hosts that are on the platform already, it's painstaking to list your property on the platform, add the reviews and gain a reputation on the platform, and then go to a new platform. So it's going to be difficult for any competitor to encroach on this moat that Airbnb has built. So to answer the question, do I still think Airbnb is a buy even at this higher valuation? The answer is yes. I still think Airbnb stock is a buy. I'm happy with the performance so far. I like the direction the company is going in. I like that they keep adding new hosts and keep increasing the free cash flow of the business and buying back their shares and not being wasteful with their capital. So I think this one is still a good one for long-term investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.